This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of June 7th, 2021. We began the week on Monday following a lot of markets getting ready for what was going to be a volatile week. It was going to hinge off of Thursday's CPI, at least so we thought. On Monday, we took a look at a number of charts, one of them, the short-term chart of the GDX, the very large ETF of mainly large-cap mining companies. Been underperforming as of late, so we thought we'd take a look at that chart again on Monday. Yeah, and I know a lot of you have been trading for years, and you follow these gaps on the charts, and you figure that every gap has to be filled. I know that's mostly true, okay? I've been following charts for years myself. But what I don't like is the absolute certainty that some profess that. Every gap will always be filled. Not necessarily, man. There are very few things that are absolute 100% certainties in life. Oh, sure, there are some. Like my buddy Sweetness rolling a 7 out on a crap table just once I get all the numbers covered. Okay, there are always going to be some certainties like that. But most gaps get filled. The majority of gaps get filled. Okay, well, here's a massive one on the hourly chart of the GDX. Again, coming last Thursday, gapping down a full point. Actually, 1.25 points at the open. I guess a point at the open. And then never rallying back and finishing at 38.25. Okay, and then you see we kind of gapped up on Friday. Didn't do much. And today's gap down at the open, see that on June 7th? Filled the gap from Friday. Imagine that. So anyway, eventually, I know all you gap fillers look at this and think, well, yeah, it sure looks like GDX is at least going back to 39.50 intraday. Okay, fair enough. So how would that make the daily chart look? Well, that's your final chart of the day. On Tuesday, June the 8th, we looked at a number of charts in our daily podcast, and one of them was the daily chart of COMEX Gold. Pretty easy to spot the clear up channel that COMEX Gold is in and has been in since March the 30th. Tried to break out, didn't manage to break out. Tried to break down a few times and didn't do that either, just in a steady up channel. And it's a very important chart for you to keep in mind in the days and weeks to come. So again, if the dollar rallies tomorrow and the bond market sells off, who's going to be there to buy, right? So you just get nothing but selling and wipe out. That's what I worry about. So to where? Well, this next chart is worth the price of admission, if you ask me. This next chart is worth your 50 cents today. That's a daily chart of gold over the last 3 months. You can see a number of things here. You can see the 50-day moving average moving in on the 200-day. At one point a month ago, on May the 5th, the gap between the two was $135. It's now $44. And closing fast. More importantly, though, is the uptrend line that begins on March the 30th. You're here that day. You caught it with me. And you can see how clear that uptrend line is. We almost got down there in that raid to 1855 last Thursday night. Okay, you draw a perfectly parallel line to that, and you move it up and look at how many tops that connects over the same time period. So clearly there's something to that uptrend line, and clearly there's something to the top of that channel, right? No doubt about it. But what's really amazing is the little skinny blue arrow. See that one? Another perfectly parallel line that starts at that low on May the 13th and absolutely perfectly catches the low on April 13th, absolutely perfectly catches the low 1 month later on May the 13th. Incredible. So, why is this worth the price of admission? If I'm right about sell-off tomorrow or even Thursday, because you know it's coming, where are we going to look for support? Well, first of all, that little purple arrow, which tomorrow is going to be $18.80, down $15 from here. And then you think, well, if we can't hold that, where are we going? Well, history would suggest in late May and early June, you're going back down to the main trend line, which tomorrow is what, 1865? By later this week, 1870? Sounds about right. So if you're looking for a dip to buy, you got some cash, you want to trade, you want to go to the casino, you want to buy some miners, whatever, I would sure watch really closely that little skinny blue arrow and then the main trend line, because that's where your opportunity lies, if you ask me. Wednesday, June the 9th, brought a little history lesson. A lot of folks frustrated with the way the metals are trading right now, yours truly included. But I thought I should remind everybody of how things were going last year at this time. Gold had begun to rally and break out, but silver went sideways, and in fact was pinned below 19 from May all the way into the middle of June and into July. And it drove a lot of us crazy. But once it broke out, it went from 20 to 30 in 17 days. So as, again, a reminder, a history lesson, that was one of the charts we looked at on Wednesday. And finally, I told you we'd look at this chart one more time. Last chart on this page is one I gave you this morning. This is from this same time period last year. Okay, silver had come out of that low down near 12 in March, rallied back up to 18, fell back to 15, and then as gold took off on June the 5th, okay, Friday, June the 5th with BLSBS Day. I was just getting back from my beach vacation that so many of you chipped in and bought me. And gold started to rally from 1680 to 1780. And all silver did for a whole another 5 weeks was go sideways. Like I said, many of us, we said, what is going on here? Between about 17.5 and 19, all the way up until the 8th of July. From May the 19th to the 8th of July, sideways. But then look what happened. Finally perked up, got up to 20, took another week to bang against it, and once it got above 20 on July the 20th, it was off to the races. So now go back and look at that silver chart of right now. Right? It's gone up. It's being compressed between 27.50 and 28.50. We're all pulling our hair out, wondering why it's not going any higher with all the commodities and everything else. All it's going to take is one move. That weekly close north of 28, daily close north of 28.50 sets up a run to 30. And man, just like this chart last year, once you put a 2 on it, look how quickly it moved. Once we put a 3 on it, look out. I'm just telling you, that's what I expect in the days and weeks to come. Our Thursday conversation this week was with Dave Cullum. Dave is a professor of organic chemistry at Cornell University in upstate New York. Brilliant guy, and offers brilliant observations on the world, economics, monetary policy, you name it. You can follow him at David Cullum on Twitter. I'd encourage you to do that. I'd encourage you to visit by TF Metals Report. Click the link on the homepage and listen to the podcast if you can this weekend. And then on Friday, gold got the shit kicked out of it again, if for only reason that the dollar was up 40 cents. And the dollar's only up 40 cents because the euro is weak. But the machines that do all the trading see the dollar rise, and the banks want to keep price below 1900 as they have for the last month. And gold is now $30 off its highs of just 12 hours ago for no reason. Bond market rallied 15 basis points this week, and the 10-year note yield is under 1.5%. Annualized CPI is at 5%, and so your real yield is negative 3.5%. That's the most sharp negative real yield since 1980, and gold is down $20 in the week. Hey, have a great weekend, everybody. Maybe we'll do better next week.